1 year ago today, President Obama signed the Dodd-Frank Financial Reform Act into law, and a lot of struggling homeowners may not know it, but that law includes a program to help them avoid foreclosure. But the Emergency Homeowners Loan Program, which just started recently in some states, is only taking applications for one more day. Teresa Acampora spent more than $15,000 making her home handicap accessible for her 10-year-old son Kyle, who has cerebral palsy. So when she fell behind on her mortgage after losing her job as a sales and marketing director in 2007, moving was a bad option for her family.
Losing this home was not an option. At one point, we were 10 or 11 months behind on the mortgage and very actively in the throes of a technical foreclosure.
But Acampora was able to avoid that fate after she learned about a new federal program for homeowners who are in default and either unemployed or underemployed. So you would have been foreclosed on if not for this program?
Absolutely. This program, literally, we were 7 to 10 days away from foreclosure.
The fund that saved her family is called the Emergency Homeowners Loan Program. As part of the Dodd-Frank Act, lawmakers have set aside $1 billion to help qualifying homeowners get up to $50,000 to bring their mortgage current and help with 2 years of payments. The loan is forgiven after 5 years if the mortgage is kept up to date.
We'd want to see those 1099s for that.
In Connecticut, the program has been up and running since April, where 1 out of every 1,525 homes is in foreclosure.
It really helps people who have done everything they can to play by the rules.
But elsewhere in the country, many of the neediest applicants may not receive the help.
I don't think people know about the program. Have you heard much about it?
27 states launched the program just last month, and the deadline for applicants is Friday. But for Acampora, the help came just in time.
Amen. It was a godsend. There's no other way that I could possibly describe it to you.
And joining us now from Capitol Hill is Massachusetts Congressman Barney Frank, co-author of the Dodd-Frank Act. Great to have you with us, Representative Frank. Good morning.
Thank you.
So clearly, this is something that can help people. It certainly helped Teresa Acampora, but it wasn't very well publicized. And now the deadline is tomorrow. Why not get the word out in a more big way?
Well, I'm very disappointed in HUD. I generally work well with the Obama administration and HUD, but they really were guilty of great incompetence on this one. This is a program which I started trying to sell this to the Obama administration 2 years ago. And I want to make just 2 points, if I can, about it. First of all, this is not for people who made a bad mortgage deal. I may have some sympathy for people who borrowed more than they should have, who were imprudent, but they don't have a claim on federal money. This money goes to mortgages that were reasonable when they were made, but are in trouble now because the people are unemployed, and you can't pay a mortgage out of unemployment compensation, especially when it's expired. Secondly, we're not just doing this as a matter of compassion for individuals. Well, that's important. Foreclosures hurt the neighborhood, and they hurt the whole economy. So we put this money in there. In fact, in the original bill that we had that went to the House-Senate conference, we had $2 billion, not one, and it wasn't going to cost the taxpayers a nickel because it was going to come from the large financial institutions that helped cause the crisis. Unfortunately, to get the Republican votes we needed in the Senate, we had to cut it in half and take it out of the taxpayers. But it was still an important program. And HUD has delayed, and I have been pushing and yelling and doing everything I could to get it working. And I hope this goes through. If there is any money left over, and again, this is only for people who made a good mortgage decision and are unemployed, then we're going to have to find some other way to get that money out.
Representative Frank, if you can't rely on organizations like HUD to carry out these programs, then why even put the money there in the first place? And is there perhaps another solution, for example, a private solution that would be better organized to do something like this and help more people?
Let me ask you your first question. You said, why do it in the first place? Well, ask Ms. Acampora. Do you think she would
I'm not asking about that, Representative Frank.
You said,
we're asking about.
I'm sorry.
We're asking.
Excuse me.
We're asking the question, Representative Frank. You can answer this one, okay? Answer the question of why go through HUD, and is there a better solution that might work better with public dollars at risk?
Well, I like to answer all the questions asked of me. Your first half of your question was why do it at all, and I wanted to answer that.
I think that was clear from my report.
Well, but again, you asked the question. I don't mean to quibble, but I shouldn't be, I answer what you asked. Secondly, it does use private people to distribute it. And to give public money directly to a private institution could be a problem. But I have to say, I have never seen HUD perform so badly. So if we are able to extend this, or if we do something in the future, I would agree. We have to minimize HUD's involvement. With all that, I believe that we still have the capacity. If tomorrow comes and there's money left, and there are people who are like Ms. Akinpur in need, I will work very hard to find another way to get that money out to them. I'm disappointed in HUD. I've never seen them perform so incompetently. And yes, in the future, we'll have to take that into account. But it's still obviously a very worthwhile program.
You did make the point, this isn't about helping subprime borrowers. This is about helping people who find themselves in the unfortunate position of a job loss, or they happen to be unemployed. So the basic underlying problem here is a jobs problem. And these people will have to get jobs in order to make sure they stay current on their mortgage for the next 5 years. How do you solve that part of the issue?
Well, I think we have to do what, frankly, Ben Bernanke, a Bush appointee originally to the Federal Reserve, said. We need to get a program to reduce the deficit over the longer term. But that should not lead to serious reductions in the next rest of this year. You have to do a timing thing. One of the reasons we have an unemployment problem, it's only a part of it, but there are 500,000 fewer people working for state and local governments today than were working there 2 years ago. That's teachers and firefighters and public works employees and police officers. So I would provide some more money to do that. I would provide some more short-term money in the context of longer term. Secondly, we are now spending well over $100 billion a year, $120 billion a year in Iraq and Afghanistan. I was never for going into Iraq in the first place. I want to bring that money home. We are creating jobs with that money, but they're not here, and they're inefficiently created. So I would take the money back from Iraq and Afghanistan, spend it at home on those kind of programs within the context of a 10-year deficit reduction.
Congressman Barney Frank, sorry we have to end it there, but we appreciate you joining us this morning.